Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. What an apathetic day it's been today. Markets are trying to sift through news, not really seeing anything. I do believe, though, that volatility might be telling a different story right now and perhaps answering a question that the market's not even asking right now. And that is, volatilities are generally flat, if not down, across most all asset classes, largely on the fact that maybe this fiscal cliff will get figured out. Maybe Greece will come together and be able to get this financing. Maybe the IMF and the ECB and everything else in Europe will work out, because volatility is really telling a different story. Let's start with the S&Ps, NASDAQ, and the Dow. Right now, it's important to note that the S&Ps are trading above their 200-day moving average, something we didn't see yesterday or the day before. VIX has gone off, has gone lower, implied vols are lower. More importantly, investors seem to be rolling down their downside protection to even more out-of-the-money strikes. What that has done is soften skew just a little bit, making skew pretty attractive relative to where it's been the last 2 to 3 years. Moving on to rates. Now keep in mind that the rate market was closed yesterday. We see the front end of the curve rallying more than anything else. But what's surprising most investors is that volatility in rates in general is down again today, even with the big sell-off in volatility we saw last Friday. Foreign currencies, just a mixed bag, but again, volatility in the FX is dripping lower, mainly in the G7 currencies. We did see a sharp reversal in the euro this morning, and vol was a little bit pumped up early on, but since then it's just dripping lower. I do need to say that with the exception of Canadian dollar and Australian dollar, both of the commodity currencies seem to be a little bit more firm than everything else. Moving on to commodities, the commodity sector in general is soft, lagging the tape, given that the S&Ps are higher right now. Most commodities are lower today, but when you look at the metals markets, especially with copper and with gold and silver, those volatilities are down right now. Not a whole lot, but down just a touch. One trader told me today that there's been just a lack of buying interest in gold out-of-the-money calls, something that we saw every day last week, especially the 1750 through the 1800 strikes March through June. Now, oil is the outlier today. Oil has hovered around $85 a barrel. We do know that the news has come out that there is an oversupply right now, and the oil market is trying to find a demand, and right now the demand's not there either, although oil is just stagnating around $85 a barrel. With that, oil volatility is up on the day. Some traders noted that there's been a lot of buying interest, especially in the strangles, the out-of-the-money calls, out-of-the-money puts, especially in March and June contracts. So it's kind of giving a lift to the volatility. Also, it's important to note that oil vol was down basically every day last week, so maybe it's just finding a new home, and being up today might not be tragic news. It might just be a catch-up from being off the map a little bit last week. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.